Hello, ladies and gentlemen. Today is August 12th. Welcome to another episode of Trading for Life. The Buffett indicator is now at 212%, the most overvalued level, and CPI came out at 2.7%. The market rallied 1%. We're going to review why the Fed will not cut rates and what might happen with the next CPI. Stay with me. I have a lot of news and data for you. If you like trading like we do, make sure to like and subscribe. Let's get it. President Donald Trump on Tuesday urged the Federal Reserve to cut interest rates after July's inflation report, without specifying by how much. Later, Treasury Secretary Scott Bessent suggested a possible 50 basis point cut in September. July's CPI saw its biggest rise in 6 months, hinting at tariff-driven inflation, but not enough to rule out a cut. The Fed kept rates steady in July. U.S. stocks rallied, with the S&P 500 up 1.13%, as hopes grew for a rate cut at the September 16-17 meeting. Export controls used to be about national security, not pricing strategy. That changed this week when President Donald Trump confirmed a deal turning chip exports into a government cash machine. The U.S. Treasury expects $3 billion from NVIDIA and nearly $1 billion from AMD this year. The twist? Washington also owns 15% of MP Materials, the rare earth miner feeding those chips. It's like holding both Park Place and Boardwalk in Monopoly and charging for every export license. The timeline seals it. April 2025, the H20 chip is banned. June, the ban is reversed but no license is issued. Then NVIDIA CEO Jensen Huang meets Trump, and suddenly licenses roll out like Willy Wonka's golden tickets. The art of the deal, government style. Goldman Sachs CEO David Solomon became the latest target of President Donald Trump's criticism. On Truth Social, Trump pushed back after Goldman economists said U.S. businesses have absorbed most tariff costs, which will eventually hit consumers. Citing July's mild CPI data, Trump claimed tariffs haven't fueled inflation, only massive amounts of cash flowing into the Treasury. The S&P 500 closed above 6,400 for the first time Tuesday after July's modest CPI increase boosted hopes for a September Fed rate cut. Investors remain wary, however, that future tariff shocks could hit consumer spending. PowerPay CEO Mike Petrakis said big contractors have so far absorbed tariff costs, but prices for home improvement projects may rise next year if tariff noise doesn't fade. Gateway Investment Advisors Joe Ferrara warned consumers haven't yet felt the full impact, with big-ticket items like appliances or cars potentially costing hundreds more. July's core CPI rose 0.3%, the biggest gain in 6 months, pushing the annual rate to 3.1%, while headline inflation held at 2.7% thanks to lower gas prices. Tariff-related pressures are starting to show, particularly in services, which jumped 0.4%, driven by housing, medical care, and airfare. The uptick complicates the Fed's September decision. Inflation points to holding rates, but a weakening job market argues for a cut to prevent recession. Most investors still expect the Fed to ease policy, betting recent price increases will prove temporary. 2 Fed leaders signaled Tuesday they don't see a need to cut rates in September, despite investor expectations after July's CPI report. Kansas City Fed President Jeff Schmid said tariffs' limited impact on inflation supports holding policy steady, while Richmond Fed's Tom Barkin said current data doesn't call for a change. Both were upbeat about the economy, noting the labor market remains stable even as it cools. Their stance contrasts with other Fed officials citing job market weakness as a reason to ease policy, highlighting divisions ahead of the September 16-17 meeting. Now let's review some data. I want to show you guys about the CPI. This is the monthly change for July. Take a look, because I have more interesting data to show you. Check out the chart. Frozen non-carbonated juices and drinks, 3.97% lettuce, 3.03% frankfurters, 2.50% coffee, 2.27% citrus fruits, 2.10% tomatoes, 1.70% uncooked ground beef, 1.63% uncooked beef steaks, 1.47% Uncooked other beef and veal, 1.40%. Frozen fruits and vegetables, 1.33%. Over the past 5 years, prices across a wide range of goods and services in the U.S. have increased significantly. Here's a breakdown of some of the most notable changes. CPI new cars, plus 21.0%. New vehicles have become considerably more expensive. Family health insurance, plus 24.0%. The cost of insuring a family has risen steadily. CPI food at home, plus 24.1%. Groceries and other household food items have seen notable price growth. CPI shelter, plus 27.5%. Housing costs, including rent and related expenses, have increased significantly. CPI food away from home, plus 30.3%. Dining out has become substantially more expensive. CPI used cars, plus 32.9%. Even pre-owned vehicles have surged in price. CPI electricity, plus 37.8%. Utility bills for electricity have jumped. CPI transportation, plus 43.4%. Overall transportation costs, including public and private transport, have risen sharply. CPI gasoline, plus 43.9%. Fuel costs have increased dramatically. U.S. home prices, plus 51.6%. Real estate prices have grown at a staggering pace. CPI gas utilities, plus 56.1%. Natural gas bills have climbed sharply. CPI fuel oil, plus 57.7%. Heating and fuel oil costs have surged. CPI auto insurance, plus 60.5%. Insurance premiums for vehicles have increased significantly. CPI dozen eggs, plus 157%. Even basic staples like eggs have more than doubled in price. These figures highlight how inflation has affected everyday life, from essential groceries and energy costs to major purchases like cars and homes. Over just 5 years, many Americans have felt the impact in nearly every aspect of their budgets, illustrating the rising cost of living across the country. Trump calls for immediate rate cuts and threatens lawsuit against Fed Chair Powell. Jerome, too late. Powell must now lower the rate. Steve Mnuchin really gave me a beauty when he pushed this loser. The damage he has done by always being too late is incalculable. Fortunately, the economy is so strong that we've blown through Powell and the complacent board. I am, however, considering allowing a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he has done in managing the construction of the Fed buildings. $3 billion for a job that should have been a $50 million fix-up. Not good. Fed September 25th. PPS rate cut. Bets surged to 90%. After CPI data, Powell may have little choice but to cut rates. A CPI reading of 2.6% or below could strengthen the arguments of Fed doves advocating for additional rate cuts in 2025. Conversely, a reading of 2.9% or above could cause some of the more hawkish FOMC members to hesitate about cutting rates at all this year. As I said before, Jerome Powell needs to leave ASAP. With all the information I've shown you about tariffs and other economic factors, what would you do if you were Fed chair? Would you cut rates or not? Let me know in the comments. I'll go first. He shouldn't cut rates. He needs to hold them as long as inflation keeps trending down and eventually blows past 2%. All right, ladies and gentlemen, that's all for this video. If you enjoyed it, please like and subscribe. Thanks for watching. If you have any questions, let me know in the comments. Thanks again, and goodbye for now.